Yeah, they have dropped about 24.2, 24.3K Bitcoin since that time, about 18 days ago. That's a pretty long stretch of them dropping their coins. And historically, when they flatten out or they are, not accumulating, which is the norm, that's when we see these big drops.
Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Brian from Santiment. And as you all know, we're going to do a deep dive into the metrics around Bitcoin and altcoins to help you navigate this market because we want to look at the data, not our feelings and emotions. Brian, happy Friday. Great to see you.
Happy Friday. Happy Halloween to all who celebrate. Yeah, it's you said it perfectly. We're trying to measure things with our logic and with data rather than getting too emotionally invested, especially right now after we've had a bit of a down week.
Yeah, absolutely. And, usually we record this earlier in the week, but we had some big announcements this week from the Fed that they're going to continue to cut rates and that they're ending quantitative tightening come December 1st. In addition, some progress, not a full resolution with the U.S.-China trade tariff situation. So I think it's a good time to be recording, and people are searching for answers, Brian. The sentiment is not looking too good.
Yeah, I mean, the sentiment's been all over the place, as we'll check out shortly, but we definitely saw some serious fear a couple days ago, and we were talking about how we were probably going to get some sort of relief rally to punish all of those fudsters out there who were selling off while things were hemorrhaging. And now we've kind of had a minor relief rally, and going into the weekend, it's going to be a bit of a head scratcher as to whether we're safe for a few days or if we start to continue to pour down now that people are getting their hopes up again.
Now, I've often stated over the years, Brian, any week there's an FOMC meeting or some update from the Fed, there's tons of volatility. And I've been telling people like, hey, I can't even judge the market right now. Like, I think we need to give it a week or a few days or whatever, right? So that the dust settles, because it is just market makers and whales, they play the games and there's just tons of volatility. The markets are fooling people, doing fake outs and much more. So I think some of this is a bit of an overreaction, but there are some bearish signals on the charts and things like that.
Yeah, totally agree. It's such a difficult thing to measure because it's seemingly been throughout 2025 that whenever a Fed rate cut is on the horizon, or even just an FOMC meeting in general, people are faked out. And that's kind of just the double-edged sword of crypto markets. It's such a speculative driven market that whatever the crowd/retail group expects, the opposite tends to occur. And it's almost like a three-wave pattern most of the time, where you've got this buildup, which we see in this illustrated chart here. This is from October 25th all the way until the end of day 29th, which was the day of the FOMC. So we had this big buildup going into it because the interest rate cuts were almost a sure thing at that point. Polymarket was showing like 95 to 98% going into the week. So people were pretty positive. So it was kind of buy the rumor time, right? We've all heard the saying, buy the rumor, sell the news, or sell the rumor, buy the news. This was the former. And we saw this big buildup go up to 116K. We got this ranging the day before. And then, what do you know? Going into about 12 hours before the meeting, our night times while we were sleeping here in the US, we got this big drop off, then a little more chopping. We get a little more hope. This is right before the meeting here. And then boom, right before the speech starts, we suddenly get this drop and everyone's going, what the heck? The speech hasn't started. I still am hearing that there's going to be cuts. Why is this happening? Well, the smart money, the key stakeholders were like, you know what? We sold here because the crowd was buying in so much. We let it build up one more time, and then we decided to sell here. I won't get into the nitty gritty details, but there was evidence that there were a lot of big whale transactions here and here right before the meeting. And then we drop off. We get the speech. I know the screen's a little hard to see. I'll make it just a tiny bit bigger. We get the speech right here. That's what this mild green bar is. And then all of a sudden he starts to turn hawkish, where he says, yes, I'm cutting rates as you guys expected. I'm paraphrasing, obviously, but we aren't going to guarantee anything the rest of the year. We're still worried about inflation, the economy, this and that is not looking too hot. So that caused people to say, well, we got our outcome, but we're scared of, him not doing that third rate cut come next month. And that's going to concern us. So we get this tiny little ray of hope followed by another drop. And then eventually got all the way down to 107K yesterday. And now it's popping back up again. But it was a very interesting pattern. I made this longer term chart that really shows the series of fake outs we saw this year, going all the way back to April, which was right after, the tariff madness at the beginning of the month, followed by this rate or FOMC meeting where nothing happened. There was no rate cuts, I think until the first one was in September, if I'm not mistaken. But we have the FOMC meeting that actually sparks a huge rally after it was going down. Initially, you can see the price here in the corner going down right before, and then the FOMC meeting happens, and we go on this massive relief rally right back from 97K all the way up to 108, 109, something like that. So that ended up being a fake out. The next one happens in mid-June. This was right before like the US, Iran, Israel battle. And that was kind of a mixed reaction, but it did go down right after. Then we zoom all the way to the end of July. This was a fake out where we thought, oh, maybe there's going to be a rate cut. Turns out, no, price goes down. This is the one where Trump got really mad at Powell and was saying he needs to be fired and stuff. Some of you may remember that. Then we get another fake out here in mid-August, right after the then all-time high. I think it was right above 120K, might have been 121 at the time. So we go down. The FOMC meeting gives people hope. We get a big jump here, and then another fake out. Then another one in mid-September. We build up, build up, build up. This is very similar to the one we just had. And then a big fake out happens at the FOMC meeting, despite rate cuts happening, and we go down. Then this latest one, we're going down, going into the FOMC meeting. We get a tiny little bounce, then further down, and then today we're going up. So what have we learned from this? Expect the unexpected, right? Whatever retail is essentially thinking the logical outcome is, they're the ones that are creating the waves, thinking that, oh, this is supposed to be what occurs. Retail is buying because they say, oh, the rate cut is happening just like we expect. And then they're scratching their heads going, I got fooled, when they see that prices go down. So it always tends to be kind of either a 2 or 3 wave pattern where they either buy going into it, then there's a sell-off, then another buy, or they sell going into it, bounce happens, and then it goes down further. Right now, we kind of are seeing the third wave where the rate cut happened, prices went down, retail says, I got fooled, I'm selling off, and now we're buying as the smart money scoops up all of the FUD money out there right now. That's my long tangent about the whole series of events that has happened, not just with this one, but throughout the year.
Yeah, and to your point, there's a lot of buy the rumor, sell the news event type things happening here with market makers and whales.
Yes.
The other factor that people are looking at is President Trump meeting with President Xi, and that could be some resolution to the tariff situation. Now, there have been some positive news, but it hasn't been fully resolved. Are people talking about that? Is that influencing any of the social sentiments?
Yeah, great question. So this is the last month or so. Let's just go, about the last month here. So we can look at 3 of the big driving topics that have been happening, more on the political side of the fence here in the US. The first one, of course, was CZ getting pardoned. It's been about almost 2 weeks now since that happened. You see the big spike here about 8-9 days ago. And markets actually moved up. This was kind of a signal to crypto that, oh, the good guys can have some solace. They can have some relief and get pardoned for some things that I think the crypto crowd felt were overblown on his end in
Mm.
terms of money laundering and stuff like that. So this was kind of a celebratory event. People like CZ, and markets went up as a result for a variety of reasons as well. It wasn't just because of CZ. Um, Besides that, we've had some discussions between Trump and Russia, because Trump's been a little firm about, Putin ending the war on Ukraine and things like that. So that got a big spike about 2 weeks ago. Right at the bottom, we got a rally right as that big spike occurred. And it's kind of died down for now. I still think it's going to be an ongoing thing going into the rest of the year. Obviously, I can't predict things like wars ending. None of us can, other than Trump and Putin, pretty much. But you can see that that's been an ongoing discussion, and more volatility definitely occurs whenever there's a headline about, talks between Trump and Russia or Trump and Putin. And then lastly, as you mentioned, Trump and China, the discussions between him and Xi regarding tariffs and trade policy, that's undoubtedly going to rock markets whenever, Trump puts out a Truth Social post about being mad at him, or, oh, we're all good now. That seems to make a big difference. You can see the biggest spike happening right at the bottom. So there was this big sell off from the initial people who saw the post from Truth Social. And then when the crowd realized it, maybe 6 hours later or so, that's when they said, oh no, we've got to sell off now. And as soon as the crowd said it's time to sell off, what do you know? We get that bounce.
Mm.
So there's definitely been three driving factors from that economic uh, spectrum over the past 3-ish weeks or so.
Interesting. So I'm curious how this is affecting the Bitcoin MVRV, if we can look at
Mhm.
that.
So from an MVRV perspective, we can see that the overall 30-day average returns is at about negative 2.5%. Pretty good sign. As long as the MVRVs are staying in the negative range, we are in a less risky position than usual
Mm.
in terms of buying in, adding on to our positions, or even holding. The 365-day MVRV ratio is just above zero at about plus 5.8, call it 6% or so. And overall, this tells us we're in a pretty average situation here. Both of these, from a long-term perspective, are pretty much at even right now. I mean, just below zero for the 30-day, just above for the 365-day. It really means that things can go either way. I know that's not the most helpful answer, but it at least means we're not in the same positions we were in like mid-July, when the MVRVs were super high, or even in just about 3 weeks ago when we hit that all-time high on October 6th. We had a clear signal that we were overbought, with, the 30-day MVRV being above 7%, 365-day being above 21%. Those are the kind of scary danger zones that can safely tell you can take profit and not be in too much pain uh, at that time. So we're basically hitting the reset button now.
Yeah, that makes sense. And to your point, what we've seen historically, if these numbers go negative, that's actually good for the next rally, major rally.
Totally.
So you can certainly use this data to swing trade, or whatever. Even if you're a long-term holder, you see that. Look, the market's going to bottom out at some point, right? Markets don't go down forever, and they don't go up forever, but it's just this cyclical pattern.
Exactly. Yeah, there were a few very slight times over the past week where you could see both of them were going very negative.
Hmm.
And those are really the times historically, like in the last 6 months or so. If we zoom out here, I mean, especially when they both go negative, like this little sliver on October 17th, um, when that big crash happened, that was a clear buy signal. So you get it on both sides of the fence. Buy when the crowd is in pain and there's blood in the streets, and sell when you've got everyone euphoric and starting to daydream about those Lambos.
So on that note, what are the whales doing? Are they accumulating? Are they exiting a bit?
Yeah, so in terms of the bearish argument, this is the strongest one that the bears have right now, and it is a bit concerning for all the pro crypto longers out there right now. We look at October 12th, the group of 10 to 10K BTC wallets who are holding a little over 68% of all of Bitcoin. This is a very impactful group. They were at about 13.7 million Bitcoin held overall, and they have dropped about 18.4K BTC over those. Excuse me, actually, I've got to refresh so we can see the past week. Let's go past 6 months. Yeah, they have dropped about 24.2, 24.3K Bitcoin since that time, about 18 days ago. That's a pretty long stretch of them dropping their coins. And historically, when they flatten out or they are, not accumulating, which is the norm, that's when we see these big drops. And some may argue that's already happened here. But I mean, the closest comparison I see is here back in February, where they were dropping maybe 55K in that same stretch. So about double what we're seeing now. They dumped pretty significantly and the price dropped 13, 14%, 16% I see here. And generally the line follows these smart money whales pretty closely. It's not perfect, but from a long-term perspective, if they're dumping or at least not accumulating for a long stretch, the price tends to suffer. So I'm really hoping that they start to turn around and we get a little accumulation. Generally, if prices fall enough, they get satisfied and they say, okay, I'm going to buy back in now. So we'll see if, prices sitting at 109K has been enough blood for them to say, all right, I'm going to start adding to my bags again.
Yeah, great point. Because we just look at the Bitcoin MVRV, maybe that goes a bit lower. The sentiment's in the gutter, right? To your point, they're like, wait a minute, all the retail, they're not bullish anymore.
Yeah.
Now it's time for us to scoop it up again and rinse and repeat.
Yeah. And we can take a look at sentiment here on that point because it's been kind of a Jekyll and Hyde day by day situation for the retail traders. If we look at where they were super negative, oh, what a coincidence. It was as prices fell off a cliff after Trump put out that post about 100% tariffs about China. So just like we saw back in early April with the big poster board saying he's tariffing the whole world, we get this big negative sentiment spike, and then we get the bounce. Retail starts to change their mind, but they're still kind of bearish. They're not convinced. Then we get this big bounce, and they've actually been kind of average to above average on sentiment, which you might think is a good thing, but it's not. We don't want to see retail starting to cheer up and say, okay, the water's clear again. We want them to stay down here. And today, it's been a short sample size because the day's only half complete. They're actually showing one of the more positive days we've seen over the past 3 months or so. So I don't love this. I'm a little surprised by how optimistic the crowd has switched back to when they were so, down in the dumps just a week to 2 weeks ago.
Yeah, so to your point, and this is not guaranteed, but it could mean there's further downside for the price of Bitcoin, right? The whales, they start exiting a bit, and then the price goes down, sentiment flips to fear, and then they start accumulating again, like we've seen in the past.
Yeah, it's funny how quickly people change their minds based on whatever the price is doing. As we were talking before the show started, Tony, we also see, a lot of these downswings correlate with increased talks about tariffs, just as you would suspect. The biggest one, of course, was after Trump made that post. Then there was another one right at the bottom on the 17th. And then the latest small one happening just a day ago. And it comes down to sometimes it's because of an actual tariff announcement. And sometimes people just see the price fall and they say, what could be causing this? And then they need to attribute it to something and they say it's the tariffs, even if nothing happened.
It's funny. There's a saying, narrative follows the price, right? It's people need a story. They need a narrative.
there's always something that people have to latch onto to give themselves assurance that there's a reason for their portfolios going down. It's not the same way when prices go up. If Bitcoin goes up, they just say that's what Bitcoin's supposed to do. We don't need to point to any reason why this is happening. This is the default. So I'm not saying that the crowd is all wrong, but they are emotional beings. We all are.
Yeah.
And there's going to be some natural uh, strong reactions to prices going down and a lot of shrugs when prices go up.
Yeah. And Brian, since we've been doing this exercise of going through the data, I've learned to get past my emotions with the markets. Like, I have skin in the game, so seeing my portfolio down really sucks. Like, it's annoying, and hearing another tariff announcement is annoying as hell. It's like, my God, would they get this resolved for it, right? But at the same time, I go to the data on sentiment, and I'm like, oh, I see what's happening. Like, this is just, it's volatile, but it's all still cyclical when you zoom out.
Exactly, and it's the fact that you have skin in the game and others have skin in the game. I mean, it does make it a little tough to be objective at times. And I know you do a great job of it, but not everyone's the same way. It can be impossible when you see a new news story that causes Bitcoin to suddenly drop 6% in 2 hours. It makes you facepalm and go like, when is this stuff going to end? And as someone who doesn't have skin in the game, even I get emotionally invested and just go, why can't markets just play out in more of a fair manner without all of this artificial noise and manipulation that's impacting stuff all the time?
Yeah, for sure. I'm assuming, similar to the whale data, the ETF inflows, outflows are probably reflecting similarly, right? Because I think I saw some information like there have been some outflows.
Yeah. So there were quite a few outflows around the tariff announcements from a couple of weeks ago. I'm just making sure we're up to date here. Even in the background, you can see this huge inflow spike. I mean, it's kind of been a weird inverse correlation as of late. And when you see these huge inflows, did it refresh? Oh, it didn't. Let me make sure it finishes. But generally speaking, when the big inflow spikes happen, that's when we tend to top. And when the outflow spikes happen, we tend to bottom out. I'll give it another few seconds. And if it doesn't load, that's okay. I know based on what data I've seen in the background that it's kind of chopped back and forth. Not too many extremes in either direction just yet. But we're actually kind of hoping, based on how much retail has gotten into ETFs now, that we start seeing a lot of outflows, because that's going to be basically a FUD signal that the crowd is panicking. And when they panic, we tend to see bottoms.
Oh, for sure.
Trying one more time here. But yeah, we have data up until the 25th or so, and it's just been kind of back and forth. And I believe that's how it's played out the last few days as well.
Yeah, I've been seeing the same thing. Like, some days there's inflows, some days there's outflows. It's just a mixed bag. It's just this is a really weird time. Like, to your point, like, there's not extremes in either direction. But I guess it is what it is.
Yeah, I think anytime tariffs start getting mentioned and that gets into the news,
Yeah,
the 99.9% of people who don't know what the next thing out of his mouth or she's mouth is, they kind of sit on their hands and they say we're kind of powerless in analyzing markets right now. Resistance and support levels don't matter so much when this is all being so politically driven right now. So that we tend to see people kind of freeze up, rightfully so, because they're a little more powerless than usual when we're getting news driven stuff that just plummets or sends prices upwards.
yeah, for sure. Let's take a look at some altcoins, and I'm assuming many are not doing too great. Let's start maybe with Ethereum, and we know Bitcoin leads the market and the alts follow. So I'm curious how things are looking for, let's say, Ethereum, XRP, and Solana.
Yeah, I'm glad you mentioned Ethereum. We'll start with the post I put out yesterday that gained quite a bit of traction. This is the funding rate aggregated by exchanges since the beginning of September, so call it 2 months ago. there's been a very strong pattern for swing traders out there where traders go short, prices go up. Traders start longing, prices go down. And it's been pretty cyclical. Every single time there's an extreme on either side of the coin, prices are essentially doing the most predictable thing possible, which is punish the extremes. So basically, the way exchanges work is they're going to constantly try to liquidate whatever the majority is doing. Sometimes there's a lot of flat funding rate, which means there isn't really any majority. But anytime there's a big red spike here, that means there's more shorts than longs, and shorts are actually paying longs in order to bet against the markets. And when they get liquidated, prices get a little bit of a rocket boost here, and we see a huge jump. Vice versa, then everyone gets emotional. You see these big bright green bars showing people are longing more than shorting, and longs are paying shorts in order to bet in favor of the price of Bitcoin. And then prices start to plummet. People get emotional. They start to say, all right, I'm going to try to make money on the way down, betting against. And then they get liquidated. Big long here, big short here. And notice every time there's a big extreme, price does the opposite direction until funding rates kind of neutralize. Another tiny little sliver of shorting, price goes up. They start to long again, price goes down. And then the latest here at about 3,700 was a little more shorts showing up. And what do you know? As of today, we're back up in the 3,900 range, I believe. So this is one of my favorite patterns right now, just watching the funding rates. It works a little for Bitcoin and other coins too, but it seems to be particularly strong with Ethereum right now. So I've been keeping my eye on that. And then from a sentiment perspective, so sentiment wise for Ethereum, it's been growing slightly more positive, but nothing extreme. I think this is pretty much neutral right now. Yeah, I mean, the big extremes you can see here and here, there were minor downswings right after. The big bearishness happened on the 10th, just along with every other coin out there for the most part, because of that big tariff downswing. But Ethereum sentiment looks fine. XRP is growing, which is interesting. So people are starting to think there might be a bounce coming up for XRP that decreases the likelihood of that happening. But I still think there's been a ton of pain for those XRP traders out there. And a relief rally does make some sense to me. It's down 30.5% since mid-July. But nothing extreme here. I don't think this is too bad. You do see the euphoria spike here when things were starting to look pretty good in the markets, and those euphoric traders got punished right afterwards. A Solana.
You know, it's funny. As you're going through that, I'm thinking of, I'm glad I'm not using leverage. Look, I'm not criticizing anybody doing it. If you know what you're doing and you're using data like this, you can probably be okay. But it just shows like it's better just to buy and hold because, man, it's brutal when you look at the data in the cyclical pattern.
Yeah, the holders are almost always the winners. If you just look at the people that have been holding for 10 years versus the people trying to swing trade every week, on average, the holders do a lot better than anyone who's trying to precisely time every, plus 3% or minus 3%.
For sure.
Solana, pretty much average, nothing crazy. These were kind of those bot spikes that we've talked about in previous episodes, but it looks normal now. Solana's gotten kind of crushed price-wise. Since mid-September, it's down about 25%, sort of a similar spot to XRP. I know we've talked about SWI in the past. And if we look at...
as you're saying that, I thought of, and one of the things I've been noodling on, there was so much euphoria, Brian, when President Trump got into office and, everybody's like, oh, this is going to be the golden age, right?
Yep.
I think we're seeing the after effects of that, and it's playing out over a long period of time because the euphoria was crazy and coins were going bananas and meme coins and much more.
Agreed. We saw a couple different waves with Trump. The first was when he was first elected in early November, and we see that huge rally because everyone was immediately thinking, oh, this means Gensler's out of office, right? Yeah. Gensler was like the big boogeyman in crypto that was keeping prices down from the traders' perspectives. So they were correct. Trump got rid of Gensler, and we saw that big buy the rumor rally going all the way up until he was inaugurated on, I think it was January 19th or 20th of this year. And then when he was inaugurated, everyone's like, all right, let's get the good times rolling. And we see that huge retrace that really occurred all the way until we had like a March rally, and then Trump put an end to that. The third Trump news was when he announced the tariffs with his big poster board. And that was brutal for a lot of traders, especially if they sold off thinking that this was going to be like a year-long thing. And around April 7th was like the capitulation date where retail just said, I'm out. This tariff stuff is just going to destroy crypto and destroy stock markets. And that turned out to be the ideal buy day, right? Yeah. Right when everyone else, the average retail trader, said, no more, I've had enough pain. That, like usual, is exactly when you want to buy, because Trump sees that. Everyone has their opinion on whether this was all market manipulation on his end or whether he was just trying to do his job as president. I'm not going to get into it. I know you're not going to get into it either. But we did see that Trump saw how much pain people were in, whether because the stock markets dropped or crypto dropped was the reason he put a pause in tariffs, or maybe he just genuinely decided, maybe I'm being too harsh. Whatever the case is, as soon as he started putting pauses on things, that's when markets started to rally like crazy. And we see these repeated all-time highs over the past few months. Yes, Trump has undoubtedly been the biggest buzzword related to crypto that's caused so much volatility every time he opens his mouth or has a new story related to him. And it's undeniable, and it's likely to continue. So if you're on social trends using sentiment, literally just putting in the word Trump and watching the fireworks every time he is mentioned in the news at a high rate, you see so many 180s in the markets as soon as he's a hot topic, and that's going to continue, guaranteed.
Yeah, it's pretty wild. What does the MVRV look like for Ethereum and XRP?
Ethereum's short term is looking pretty juicy, just almost negative 7%, which is semi opportunity zone time. I mean, you can see just yesterday, it actually got down to negative 10.5%. Generally, when you see the 30-day MVRV, the average trading returns get below negative 10 or above 10. Those tend to be the big polar zones where you can either buy when it's negative or sell when it's positive. Right now, it's negative. It got very negative yesterday, and we saw a little bounce ever since then. The long term, I'm going to make the price a little more easy to see here. Yeah, you can see right when the MVRV got below negative 10%, perfect time to buy. From a long-term perspective, 365 day, we're at about plus 11%. A little concerning because it's above 10%, but I'm more interested in the short term because that tends to be where prices go next. And at least the long-term MVRV is much more down to earth compared to where it was here, where we were almost hitting 5,000 for the first time ever on October 7th.
Right.
Almost plus 4. Yeah, it did get above 40% that day. That's a big danger zone when you're seeing the long-term MVRV that high. So we get on that huge retrace here. And then obviously this was a great buy opportunity. But yeah, right now, I think it looks pretty neutral, maybe slightly bullish from a short-term perspective.
And what about XRP?
XRP's MVRV should look like a little bit of an opportunity zone. Yeah, so 30-day MVRV, not quite as juicy as Ethereum, but it's at about negative 5%. Long term's at about plus 3.5%. So pretty much the same boat.
Interesting. Well, Brian, we're going to have to see how the remainder of this fourth quarter plays out. And, if we're going to see a rally, but there are some bearish signals here.
Yeah, like I said, the biggest one is just the fact that whales are not accumulating like they normally do. I would wait for them to be a key signal here that we are going to resume the rally.
Mm.
I'm just highlighting this for fun, but this is the smallest traders, and look how much they've been accumulating. In contrast to the whales going down, generally you want to see the retail traders dropping their coins.
Mhm.
Look at how they dropped here, and then prices just went bananas during that time. So two lines to really look at: wait for the whales to start going up again, and wait for retail to start dumping again as your great signals that we're about to get on another bullish rampage.
Oh, for sure. Brian, great stuff. And hopefully the next time we're meeting, things are in a better position. And,
Yeah,
we're seeing maybe some new all time highs. But thank you so much, man.
absolutely, Tony. Always a pleasure.